Everyone, welcome back to the channel. Today, we're discussing how the Fed have not raised interest rates and actually given quite a optimistic outlook, I think, for most people in real estate, most people looking to buy a home and even sell a home. This has been following a comment saying that interest rates won't go up at the moment, and we are expecting the interest rates to start falling next year. That has meant actually that the mortgage rates after Powell's announcement have fallen below 7%, according to a survey of mortgage markets by Freddie Mac. And that drops from that 23-year high, which was nearly 8% in October, down actually to a more affordable rate. Obviously, it's not nearly the kind of 3-4% that we were seeing during the pandemic. I think that this is going to be interesting. And generally, it seems like most people in the real estate market have been very happy about this change. Obviously, if you're looking to buy or sell a house, something being cheaper for the end buyer or for you buying the house is going to be an advantage because if you're looking to spend that much money, paying a low interest rate is cheaper for you, of course. But actually, for someone looking to sell a house, they probably predict that a potential buyer is going to also think about spending more money or be more interested. Therefore, there are more buyers out in the market. Now, I think there is also a different there's a different side to look at here, which is that we may also see with the 30-year rate lock that a lot of people did in the pandemic when the rates were so low, that you'll probably see more buyers coming to the market than you will sellers. If I was going to buy a house right now, I'd probably be looking, or if I had an agent who was advising me, in my opinion, correctly, I would be saying, look, we're not looking at a potential rise in interest rates, hence you're going to be stuck at this rate or higher next year. What's probably going to happen is you're going to see a drop in rates, and it probably will be very slow just to give the economy a soft landing and to keep us out of that recession situation. But as I said previously, in interest rates in mortgages in the US, you can refinance. And so if someone looks to lock in a rate right now at that 7% instead of 8%, then the chances are that probably right now they can drop that rate continually over the next 12 months. Now, you may say, hey, that's not that important. Why would you still want to pay such a high interest rate? What I've spoken to about with my clients in the last 6 to 12 months has been, yes, interest rates are higher, but we do expect those to come down, hence the situation now. And there are a lot of people, a lot of pent up demand for buyers who have been looking to buy a house, hence because they haven't been doing it for the last 12 months. So it will probably be a situation just at a certain stage where a lot of buyers will step back into the market. And will the inventory of people selling their properties, going from 2% up to 6% to buy another house, be as dramatic as that situation? So you may well have again a situation we're in now, but almost to a greater degree of that demand outstripping supply. And obviously, we expect that in that situation, prices will rise. You may have back to a multiple bidding situation, but that doesn't really help the realtor in that market. You're still going to see a lower amount of transactions. So even though there is a price drop, I think that you will see an increase in supply, but you'll probably again see a greater increase in demand. So it's going to be very interesting to watch this one. Obviously, the forecast for 2024 now is more positive than the forecast or the previous market that we've seen in 2023. This is being recorded in December 2023 for your reference. And it looked like obviously some of the banks were starting even to drop mortgage rates after just that announcement of they're not going to be increased. And I do think the Fed have done quite a good thing in this situation. In previous cycles, we've seen a completely unknown forecast of what will happen in interest rates, and the fact that the Fed is giving that much information. Look, we're not going to raise rates, and we do not see raising rates with where inflation is now at over the next 12 months, does mean that people kind of have a better understanding, and you haven't got these big yo-yo effects. So I'm quite happy with that situation. I don't know if you are as well. but I do think that this could really lead to an uptick in the real estate market, and hopefully a return for people like me in the agency market to a degree. So apparently the Dow Jones Industrial Average rose to an all-time high of 37,000 points after closing on Thursday. Obviously, the announcement was on Wednesday, and that's an increase of nearly 2% since the remarks were made on Wednesday. So I am optimistic, but also a little bit cautious. I'd love to know your guys' thoughts, as I would every single day. If you could leave a comment below and just let me know any questions, I'd love to answer those for you. I will be back on Monday with another video because it is Friday today. But I hope you guys are good wherever you are. I hope you have a great weekend, and I'll speak to you all soon. Goodbye.